Welcome back to Explain the Charts, where we demystify market movements and provide actionable insights. Today, August 7th, 2025, we're diving deep into the SPY ETF, which tracks the S&P 500, to analyze its recent performance in light of breaking news and detailed chart data. Let's start by looking at the broader market sentiment from recent headlines. Yahoo Finance reported just 15 hours ago that the S&P 500 and Nasdaq are leading stocks higher, heavily influenced by Apple's surge. Even more recently, only 31 minutes ago, news surfaced about Dow, S&P 500, and Nasdaq futures rising on hints of a chip tariff carve-out by President Trump. However, there's a conflicting signal. MarketWatch, as of August 6th, published an article suggesting a pessimistic market outlook and that stocks are sinking, which starkly contrasts the positive momentum we're seeing today. This divergence highlights the current uncertainty, with positive news from tech and potential tariff relief battling against broader economic anxieties. It's important to note that the S&P 500 index values cited in the news, like 6,345.06 or 6,299.19, refer to the underlying index, while SPY, the ETF we're analyzing, trades in the hundreds. Now, let's turn our attention to the SPY daily chart to understand the longer-term context and significant price movements. Over the past year, SPY has generally been in a strong uptrend, moving from around $520 in March 2024 to its current levels above $630. However, this uptrend has not been without its dramatic pullbacks. If we focus specifically on the period between late March and early April 2025, we can observe a sharp and significant reversal. The price dropped from highs around $560 down to a low of $481.80 in early April, representing a substantial correction of over 14%. This deep plunge was quickly followed by an equally impressive rebound, demonstrating strong buying interest at lower price levels and confirming 480 to 490 as a critical support zone. The volume during this reversal was exceptionally high, indicating massive institutional activity and a potential capitulation event. Following this major event, SPY embarked on a consistent bullish trend, pushing to new highs. Looking at the most recent daily candles, SPY ended August 6, 2025, at $632.78. The latest data point available to us from the end of the trading day on August 6th shows a closing price of $633.61 on the 15-minute chart. This upward movement aligns with the positive news about Apple's surge and futures rallying on chip tariff hopes, suggesting the market is currently prioritizing positive catalysts over tariff concerns. For short-term traders, the prior significant resistance level around the 600 to 610 range, which was broken through earlier in the year, now acts as a strong psychological and technical support. On the upside, the immediate resistance is around the all-time high of 637.57 reached in late July. While we have hourly data available, it's important to note that our provided one-hour chart data only extends up to July 25, 2025, making it less relevant for today's market conditions. Therefore, for current short-term analysis, we'll shift our focus to the 15-minute chart, which provides the most up-to-date intraday picture, closing at 633.61 yesterday, August 6th. On the 15-minute chart for August 6th, SPY showed clear bullish momentum throughout the trading day. The price opened around 631.21 and steadily climbed, despite some minor pullbacks. Key intraday support levels emerged around 628.50 and later at 632.10, with buyers stepping in consistently. The volume remained healthy, particularly during upward moves, reinforcing the strength of the short-term trend. This aligns perfectly with the news reports of the S&P 500 booking gains and leading higher. The continuous higher lows and higher highs on this time frame indicate a strong intraday uptrend, signaling short-term strength. Any dips toward these intraday support levels could be seen as buying opportunities for those looking to long the market. So, what does all this mean for your trading strategy? Reasons to be bullish on SPY in the short to medium term include the sustained overall uptrend on the daily chart, the strong rebound from the April 2025 lows, and current positive market catalysts like Apple's performance and potential chip tariff relief. A bullish scenario is reinforced if SPY can successfully break and hold above the $635 mark, which could open the door for a retest of the $637.57 all-time high and potentially push into uncharted territory above $640. However, reasons to be bearish or cautious exist. The lingering threat of President Trump's escalated India tariffs introduces macroeconomic uncertainty, which could trigger profit-taking. The contradicting MarketWatch report, while currently unconfirmed by our direct data, hints at underlying pessimistic sentiment that could resurface. A short-term bearish reversal would likely be confirmed by a sustained break below the $628 to $629 immediate support zone. If this level breaks, the next significant support to watch would be around $620 to $625, followed by the stronger long-term support in the $600 to $610 range. Long-term, as long as major support around $550 to $560 holds, the overall trend remains positive. However, increased volatility, as seen in the sharp April 2025 drop, means traders should always be mindful of risk management and position sizing. Keep an eye on any further developments regarding international trade policies and tech sector earnings, as these will heavily influence SPY's direction. In summary, watch for immediate resistance at $635 and then $637.57. Key support levels are $628 to $629 in the short term and $600 to $610 as a stronger medium-term floor. A break above $635 with sustained volume could signal a move towards $640, while a drop below $628 could trigger a deeper correction towards $620 to $625. Always remember to combine fundamental analysis with what the charts are telling you and never trade without a clear plan.